Hey traders, can you guys hear me? Test, 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 test. Okay, I think you guys can. Just want to make sure you guys can hear me. Thank you very much. Oh, all right, sorry, I was just grabbing a drink of water. What should I say? We're in breakout territory. S&Ps have not pulled back at all. I've been watching the dollar yen because I'm just waiting for this thing to, I'm waiting for it to do something great, Look, we in the FX market and the FX world for so many years have been just tickled with the idea that we're going to get some sort of breakout in the FX market. And so today's that day where I'm probably going to be disappointed. You got the dollar yen. Let's make sure we all know where we stand here. The dollar yen's been trading in a 4-year trading range, and it's been tightening in a triangle. So you guys can see it, right? We're just tightening in this trading range. All I want to do is see. All I want to see is it break out. I don't care if it breaks out higher, it breaks out lower. Some of you might say, well, Blake, it's going to break out higher and be a failed breakout. Fine. I don't care. I just want some sort of volatility. That's it. That's all I'm asking for. And so I'm sitting here on pins and needles watching the dollar yen to see if we're going to make a move above 110. Now, let me be a little bit more granular in my analysis and what I'm actually looking for here. So we have the dollar yen, and it's getting bad when I'm sitting here on an hourly chart. I'm drawing these little wedges. Actually, I was on a 15-minute chart, and I was which I don't normally do, but I'm like, oh man, maybe this is it. Maybe this is gonna, here we go. We're probing. Maybe we're gonna break out here. So I sit here and I'm like you, and I'm just sitting here waiting, thinking, okay, this is gonna be it. This is the time. This is where we're gonna get the break. But there's a lot of work to do here, even if it does break out. But well, let's first of all look at all the work that needs to be done. First and foremost, you have a couple big fibs here. You have the 88% retracement of this coronavirus move. So the 88% retracement at 110.05 is basically the last line in the sand for bulls. I mean, you could obviously, or for bears, you could obviously make a double top, but from a Fibonacci standpoint, we break that. There's more chance that it's going to break higher than give us a double top. Okay, once you break the 88% chance or 88% retracement, I always look at it more like a, probably 60% chance we start making our way higher. But that doesn't mean that that's it. We do have the 88% retracement. Then you have the January 20th highs that come in at, let's just say roughly 110.25. And then beyond that, you've got channel resistance, fib extensions, so on and so forth. There's a lot of resistance that the dollar yen would have to chew through. However, I have to state that as we are sitting here with stocks near all-time highs, I'm actually just looking at a couple of things that really need to happen in order for me to believe that this is really possible. Let's see if you can guess them. The first thing that I'd want to see happen is I'd want to see yields start to move up. And let me just pull up a yield chart rather than bonds, so I don't have to give you the inverted what I'm looking for. You look at yields. This is a 10-year yield. This is a 4-hour chart. You notice how yields are down. Well, in order for the dollar yen to really rally, in my opinion, let's go to an hourly chart. You'd actually have to see yields, start to reverse higher. Now, that's not saying that they can't. Look, we got this little consolidation happening here. Maybe we break higher. It's possible. That has to happen. You guys already know stocks are in breakout territory. Doesn't mean they're going to stay there today, but that's where they're at right now. So I want to see bond yields start to rally, and I also want to see gold sell off. Gold's actually stronger today. So just like yields are weaker, you got gold stronger. Gold's holding up. So as long as gold continues to hold up and yields continue to be weak, it's hard to see. As long as gold's strong and yields continue to be weak, it's hard to see the dollar yen actually break out. Now, the question you might be asking is, well, Blake, why don't you just short here? Because it's bid. I'm just going to give you that answer. It is bid. All these dips, when I saw this dip down to the 80s, I was thinking, oh, that's it. It's going to roll over now. And then 15 minutes later, it just bobs right back up again. So if you're going to ask, should I be in a position or what are you thinking here? I mean, honestly, I don't know. I can tell you this much. Below 109.50 right here. See that right there? Below 109.50, I would think, okay, it's over. We're heading back down again. But above 110, 10 roughly, that would suggest to me that we're going a lot higher, that we're going to be breaking out. So I think it's anybody's guess while you're here. And I'm sure you guys have your own guesses. Look, everybody is entitled to their own opinion. What you think is going to happen. Personally, I think we're going to break higher. As long as stocks don't go down, I think we're breaking higher. Will it be a sustained break? I don't know. But, I would actually be able to confirm that if it broke out today, if it broke out higher today, the only way we're going to confirm a breakout today is if we get a strong jobs report tomorrow, which could be the case. Look, most of Europe right now is going home, gone home, leaving. They're done. So it wouldn't be past the North American markets to try to push them right now when no one's looking and trip some stops above these highs. It wouldn't be past the Asian market to do the same thing. So we can still get a move higher between now and non-farm payroll. Chances are we won't. But I think non-farm payroll is going to be what really confirms or denies this move, whether we get up here or we don't. And so I just wanted to cover that with you guys regarding the yen, because I mean, it's bid up pretty good. It's not selling off, nor are stocks. So I have to imagine that as long as stocks stay in breakout territory, they're going to hit a new high in Asia. That gives the dollar yen more fuel to possibly break out to the upside. But again, yields are not moving the way they should be. Gold's not moving the way they should be. So for me, probably best to just sit on your hands and wait to see what happens. Now, a couple of you guys might want to see the euro really fast. I'll just cover the euro really quickly. Look, the euro sold off and hit the bottom of this trend line. I think if you were listening this morning, and I'm pulling up the daily chart right now. If you're listening this morning, shoot, I guess the 4-hour chart's gonna be better. I said there's gonna be a lot of support down at 109.80, 109.70. I think the low was 109, well, it was 109.63. So we probed these lows. It doesn't look bullish. Quite frankly, it looks bearish. I know we're stopped here, but I think there's more downside still for the euro dollar. Am I willing to sell it here? No, I don't like to chase down here. What I would rather do is maybe some weak non-farm payroll tomorrow. Let it rally back up to. Let me change that. Let it rally back up towards resistance here, and then use this as a selling opportunity around 110, 110.30 if you can get it. I think that's probably the better trade versus trying to chase it down here. I don't like selling when it's down here in a hole. I'd rather, sell rallies versus down here. So, and one of the other things that you might see here is this might be a descending wedge. Let me change that. this might be a descending wedge, which you got to be a little careful about as well. But yeah, selling it down here doesn't make much sense. Selling it up here makes more sense to me. But unfortunately, we're not up here, so what to do? I don't know. Just you kind of wait. Today's been a lot of waiting days, you know, to you know, it's been just a day to wait and stand aside. So with that being said, you guys have a great one. And oh, Pete says, let's see. NFP might be the catalyst. The PMIs were good and employment numbers are stalling. U.S. economy is the envy of the world. I mentioned a lot of big boys were looking at U.S. dollar, Japanese yen calls last week in one of the Roundup webinars. And maybe gold is actually returning as a hedge of some sort. Yeah, I mean, the gold market may be a hedge. I don't know. I look at gold, and the thing is, I don't want to be bearish. As you guys know, if you've been listening in here often, I don't want to be bearish, but I'm not bullish either, because we started making lower highs, so there's no sense in, like, if I wanted to play the gold back long, it'd probably be on like an ABCD type of move, like this. Play along down here. And if you think about the yen, like let's say the yen rallies past 110, well, that might take gold back to 1500. And then that'd be the place I'd be looking to play it. And then you'd said dollar yen calls last week. Yeah, I mean, a lot of people are calling for the dollar yen breakout, but that's going to happen at either side. You'll get those same calls. Remember, just because you're an institution doesn't mean you get caught on the wrong side of the trade. If you are down at triangle support, you're going to hear a lot of calls of big option buyers of 105 puts when you're down here at triangle support. So I try not to read too much into it. I try to like focus more on price action. And right now, I'll tell you, price action is very well bid. It just is. It's holding up really well. Anyway, you guys have a great one. Thanks for tuning in, and I will see you not tomorrow because it's Friday. Have a great one.